let's get right to it. You always bring these new names we've never heard about. You make me work. HERC Holdings. This stock up $100 in a year, but you're still a believer. How come?
Well, first of all, thank you, Brian, for having me on again. Always great to be on your show. Yes, HERC is, as a way of background, it was a spinoff from Hertz, the rental car company, in 2016. And the HERC Rental is the third largest rental equipment company. What we like about it is because it's really in the early stage of an upcycle of a multi-year boost of the U.S. construction. And the recent infrastructure bill is also a very strong catalyst for HERC. And, now we are in an inflationary environment, so having pricing power is very important. We think HERC will continue to have, strong pricing power. And also the recent, supply chain shortage will fuel that, pricing power in terms of having strong demand but not enough supply. But there's also a secular trend, from ownership to renting because of better cost flexibility and better asset utilization. And in this market, as you know, valuation is extremely important. HERC still trades at a significant discount to its larger peers, United Rental and Sunbelt, which is owned by Ashtead. So we think it's going to be a catch-up play, and also in addition to its margin expansion. So both EPS growth, surprise, we think, and also multiple expansion.
Watching HERC Holdings, it has been on fire this year. All right, stock number two, and again, we drive around our neighborhoods, Amy, and we see all these different landscaping businesses, and I never really thought of it as a national scale business, but your next pick is a play on that SITEONE Landscape Supply, one of the few, or maybe the only, publicly traded companies in just the home landscaping industry. You think that's going to provide a big runway for maybe even roll-ups or just bringing together what is a really highly fragmented market?
Yes, exactly. SITEONE is the largest and only nationwide distributor of landscape supplies. It's a very simple story. It's a dominant player in a highly fragmented market, like you said. They are 4 times bigger than its nearest competitor. Currently, they have 13% market share in the $20 billion market. And we think, through consolidation, because they are industry consolidator, and through their self-driven M&A program, which has been highly successful, we think they can get to 40 to 50% market share in the next several years. And also, very importantly, they have very strong pricing power. They're able to pass off their, cost. And in fact, last quarter, they had a 15% price increase. So clearly, that's a big, positive in this environment. And so we also think, there's a potential for margin expansion. And so that's why we think it's still, the stock is still very attractive at this level.
Okay, and your final pick on this Opportunity Friday for us is, it's kind of a boring old company, Signature Bank, well known to people in New York area and sort of the Mid-Atlantic and Northeast area. We don't think about banks like this very much. They're not Goldman Sachs. They're not JP Morgan. But looking at your own notes, I'm just quoting you back to you, Amy, as I like to do because you're a lot smarter than I am. $100 billion in added deposits? That's a lot of money.
Yeah, that's massive growth. That's from 40 billion, in 2019. And in this rising interest rate environment, that's a strong tailwind for EPS growth, because that deposit growth, they have a lot of money in cash now, so that can be put to work in this, a rising yield environment, and will lead to, very strong loan growth. And we also, it's very asset sensitive in terms of, EPS potential for upside for EPS. And they also have a sort of a growth engine, a recent growth engine launched in January 2019 that it called Signet, which is a digital payment platform that, through that, it's sort of a gated community for their clients that their clients can transact in US dollar 24/7, real time, no fee, mirroring the crypto market. So this is really a very, early stage sort of optionality for the crypto market.